Hello, welcome to the Town of Rehoboth's video presentation entitled Property Taxes 101, What are Property Taxes? My name is Michael Deignan. I am chairman of the town's Finance Committee. I will be narrating this presentation for you today. What is the purpose of today's presentation? First, we're going to have a discussion on what are property taxes. Second, I am going to give you some key definitions that you need to become familiar with to understand how property taxes are computed for both you individually as well as for the town as a whole. And finally, I will show you how all these pieces fit together to calculate your individual tax bill. Last, I will tell you who you can call if you have a question either about this video or some of the information contained therein. This video is the first in a series of videos we have prepared to help educate the town's residents on property taxes, both how property taxes are computed globally for the town collectively as a whole, as well as how your individual tax bill is calculated. The first video, this video, What are Property Taxes, lays the foundation for key terms and concepts that you need to understand in the subsequent videos going forward. The second video, Understanding Your Tax Bill, provides more detailed information as to how your individual tax bill is computed, as well as showing you a sample tax bill which the town will send out twice per year to its residents. In Property Taxes 103, we discuss split tax rates, a concept people around town often banty about as a way of raising additional revenue for the town. We talk about some of the fallacies of split tax rates, as well as showing you how the split tax rate has an effect on your taxes as a homeowner. In Property Taxes 104, we discuss revaluations. What are revaluations and what their effect are on your individual tax bill? In Property Taxes 105, we discuss Proposition 2.5 overrides, the different types of overrides that you can be asked to pass at a ballot election and what their impact will be on your property tax bill. Lastly, in Property Taxes 106, we discuss the different types of tax relief available to residents in town, such as abatements, exemptions, etc., what those differences are, and how to apply for them, who to go talk to in order to apply for something such as an abatement or an exemption. Let's now get started with today's video, Property Taxes 101. What are property taxes? Property taxes are a tax on real estate and other personal property calculated by a local government, such as the town of Rehoboth, paid for by the owner of the property, such as you, the homeowner. The tax is usually based upon what is called the assessed value of the owned property, which includes land. We'll be talking about assessed value a little bit later on in this video. The local governing body, which in Rehoboth's case is town meeting, will use the taxes to fund different types of government services, as well as other items it deems necessary, such as capital items, putting a new roof on a school building, or purchasing a new fire truck, new police cruisers, etc. Property taxes are Rehoboth's principal source of income from which we pay our operating expenses. In fiscal year 2021, which is the fiscal year we are currently in as of the time I am narrating this video, property taxes represent 85.73% of the town's total anticipated revenue. Let's talk about the key definitions that you need to understand when it comes to our future discussions about property taxes. The first is going to be the tax levy. The second is the EQV, which is short for equalized valuation, or in the common vernacular, the tax base. Third, I'm going to discuss the tax rate, what it is and how it is calculated. Finally, we will talk about assessed value. Let's start with the tax levy. The tax levy is the amount the town raises through real estate and personal property taxes. Each year, the amount that can be raised must be determined in accordance with Proposition 2.5, Massachusetts General Law. The town cannot just arbitrarily say, we want to raise $30 million in property tax. There's a set formula that is set by state law that determines how the town can generate property taxes through real estate and personal property. The amount the tax levy may be allowable under the law in any given year is referred to as the levy limit. The levy limit is the maximum amount of property tax the town may levy to the residents or the owners of property in the town of Rehoboth. And again, that's determined by Massachusetts general law. Any difference between what the levy limit is and what the town actually levies in tax is referred to as excess levy capacity. So, for example, if the town's levy limit is $21 million, but the town only levies $20 million for real estate and personal property tax, the town would be said to have $1 million in excess levy capacity. The levy limit should not be confused with the levy ceiling. The levy ceiling is a different concept which pertains to overall taxation in the town, including Proposition 2.5 overrides. We talk more about the levy ceiling in the video dealing with Proposition 2.5 overrides, Property Taxes 105. Generally speaking, Rehoboth taxes at 100% of the levy limit. We usually do not have any significant excess levy capacity. Now, if you go and you view different documents available on state websites, you will see that we do usually have some small amount of excess levy capacity each year, say about $50,000, $25,000, $50,000, etc. That's because when we prepare the town's budget and estimate what our revenues and our new growth and different sources of revenue are going to be, they are estimates. When the town actually sets the tax rate in the fall, we're dealing with hard numbers that the assessors compute with. Consequently, there's usually some minor variation between those two numbers, between what we think we can levy for taxes in the spring when we prepare the town budget and what we actually turned out we could levy in the fall. In fiscal year 21, which started on July 1st, 2020, Rehoboth's real estate and property tax levy, which includes all of our debt exclusions, was established during that recap process, which the assessors go through in the fall, to be $27,305,701. You can always go look at the town's levy limit on a state website at the link shown here at the bottom of the screen. This information is public record. That's the tax levy. Let's talk about the equalized valuation, or the EQV. What is the equalized valuation? Equalized valuation is the determination of an estimate of the full and fair cash value of all property in the town as of a certain taxable date. Or you can think of this in plain English as the value of all the property in the town added together. Sometimes, as I indicated in a previous slide, the common vernacular for this term is sometimes the tax base for the town. In fiscal year 21, the town's EQV was calculated to be a little over $2 billion. You can go view this information on another state website at the link shown below. EQV is sometimes a difficult concept to wrap your head around. Hopefully this slide will help simplify the process for you. What I've done is I've created an imaginary town called Rehoboth. In the town of Rehoboth, there are only 8 properties. And those properties have been assessed by the assessors at different values. So, for example, if you take a look at the property in the upper left-hand corner, you'll see that this property is assessed at $400,000. The next property over to the right is assessed at $175,000, etc., all the way across and down. Each property has a different value. The EQV for the town of Rehoboth is $3,200,000. It's simply the value of all of these different assessed values all added together. So if you take all these values, you add them together, so we only have 8 properties in the town of Rehoboth. Adding all these values together, we come up with the $3.2 million. That's how you compute the EQV for a community. Now, clearly, in the town of Rehoboth, we have thousands of pieces of property with a myriad of different values. This is how we come up in the town of Rehoboth with an EQV of over $2 billion, because we have a lot more property than the town of Rehoboth does. Let's talk about the tax rate. The tax rate is the amount of property tax stated in terms of a unit of the municipal tax base. For example, $13.24 per $1,000 of assessed valuation. The tax rate is computed very simply by taking the EQV of the town and dividing the tax levy by that number and multiplying the result by 1,000. A community calculates its tax rate annually by filling out a tax recapitulation sheet provided by the Massachusetts Department of Revenue. This is filled out in the fall by the assessors in the town. You can always go view the current recap sheet for the town at the URL shown here on the screen. Some communities have a split tax rate, where there is separate rates for residential and commercial, and that shifts some of the tax burden from residential onto the commercial property owners. We discuss split tax rates in Property Taxes 103. 92% of Rehoboth's tax levy comes from residential properties. Only 8% of the property in town is commercial, and many of those properties are small farms. To illustrate to you how we computed the tax rate for fiscal year 21, it was computed as follows based upon the tax levy in the EQV. If you recall from the previous slide, the tax rate is simply the tax levy divided by the EQV and then multiplied by 1,000 to give you the rate per thousand of assessed value. When we perform that calculation, we take the tax levy for fiscal year 21, which is the $27.3 million, and we divide it by the $2.062 billion. Doing that, we come up with the result of 0.1324. Multiplying that by the 1,000, we get the tax rate per thousand of assessed value for fiscal year 21, which is $13.24 per thousand. That's how the tax rate for a community is calculated from the tax levy and the EQV. The purpose of this slide is to give you some additional information and to show you the different property classes in town and how much of the town's total tax levy comes from those classifications. Here in the first column on the left, you see we have the tax classification. And there's residential, open space, commercial, industrial, and then personal property. Some folks ask, what is personal property? Personal property includes things such as fixtures. When the assessors go around and put values on properties, in commercial establishments, they will assign value to fixtures inside the building, such as if you go to Cumberland Farms and they have the freezers inside where the different products are maintained, or the different shelving that they have inside the building. That's all property which falls into that personal property category. The second column here shows you what the total assessed value in each property class is. As you can see, we have just shy of $1.9 billion in assessed value in the residential property class. We only have $78.7 million in the commercial property class and a mere $18 million in the industrial property class. And we have $75.5 million in the personal property class. The third column shows the tax levy, how much was generated in each one of those categories. The $1.89 billion in residential property in town generated $25 million in tax levy. Commercial generated a mere $1 million towards the property tax levy in Rehoboth, and industrial a pittance at $238,000. Personal property, a little over $1 million. Adding these values together, you come up with the overall tax levy of the town for fiscal 21, which is the $27.3 million. And then dividing it by the $2.06 billion, multiplying by 1,000, yields the tax rate of $13.24. $2.24 per thousand. You will see here on the screen in this last column where I have labeled tax rate, all the tax rates are the same for all the different classes of property. This is because we have a single tax rate in Rehoboth. If we were to have a split tax rate, then this information would be different. You would have one value for the residential class, and then you would have a different value for the commercial, industrial, and personal property classes. You can always go view information about the different classifications of property in Rehoboth and how much they generate in tax levy at the URL shown at the top of the screen. Unfortunately, a little bit obscured by my illustrations. Let's talk about some tax rates, fiction and facts. People will mistakenly focus sometimes on a community's tax rate when they evaluate whether or not they believe a tax rate is affordable. Other folks will purposely focus on a community's tax rate when they want to justify a tax increase because it provides an incorrect method of comparison between the two communities, which I will get to in a few moments. You'll often hear people say, our tax rate is lower than X, Y, or Z's community tax rate. You'll hear, for instance, well, our tax rate in Rehoboth is only $13 per thousand, but well, Attleboro, their tax rate's $18 per thousand. So we can afford a tax rate because our taxes, well, they're low. It's really the wrong metric to focus on when it comes to evaluating whether or not a community can afford a tax increase. Really what you need to focus on is the who's paying more tax given comparable houses. For example, does somebody with a $20 per thousand tax rate whose house is assessed at $250,000 pay more tax than somebody whose house is assessed at $432,000 with a $13.24 tax rate, given comparable houses? Say 2-3-bedroom homes on an acre of land. Who is paying more tax in each community? The tax rate will fluctuate every year, both in a positive and an upward direction and in a negative or downward direction, depending upon the relative increases in the tax levy and the EQV. Remember, the tax rate is simply the tax levy divided by the EQV. The tax levy generally goes up about 2.5% per year. What happens if the EQV for Rehoboth, because we end up with a lot of building in a particular year, goes up 5%? You're going to see the tax rate go down year over year because the divisor is going to go up higher than the tax rate. Shown here are the tax rates from 2011 going forward. You can see in 2011, we started with a $10.13 per thousand tax rate. And over the course of the past decade, that tax rate has fluctuated up and down by varying amounts each year. The red and the green arrows indicate the direction year over year. So for example, from 2014 to 2015, we saw a decrease of year-over-year decrease from $12.44 to $12.31 per thousand. But in 2019 to 2020, we saw an increase. Granted, it was only a penny increase year over year, but the tax rate did go up a little bit that year. Because the tax rate is simply this mathematical formula, it will fluctuate year over year. This is one of the reasons why it is truly a meaningless statistic when it comes to evaluating whether or not a community or you individually can afford a tax increase. A community's tax rate decreases, not taking into account things like debt exclusions dropping off the tax rate, when the relative rate of the property which is being added to the tax base, or the EQV, increases at a higher rate due to new growth, a revaluation process, etc., than the annual Proposition 2.5 increase the town gets every single year. For example, if the tax levy increases 2.5%, but the EQV increases 4%, the tax rate will drop year over year as the divisor grows larger than the dividend. This is basic math 101. Conversely, if the tax levy increases by, say, 3% because a debt exclusion comes onto the tax rolls, but the EQV only goes up 2% that year, then the tax rate year over year will increase because the dividend will grow at a higher rate than the divisor. It is entirely possible a community can pass an override, permanently raising the tax levy, yet our tax rate would still decrease because of a larger increase in the tax base that year. It isn't very probable, but it is a possibility, and it illustrates one of the reasons why the tax rate of a community is the wrong metric to focus on. For example, again, let's say that we pass an override, and rather than going up 2.5% one year, the tax levy goes up 4% that year because of the override. But the EQV goes up 5% due to the large number of properties that are coming into the tax levy process because of all the building that's going on in town. Well, because the EQV still increased at a higher rate than the tax levy, even with the override, the tax rate year over year would still go down. The actual metric to focus on is what the town's tax levy is, which is the amount of money the town brings in annually from property taxes. And for purposes of evaluating how much you're going to pay, what your assessed value is. Now that we've discussed the tax rate, EQV, the tax levy, and we've talked about some of the fallacies of tax rates, how do all the pieces fit together to determine how much you're going to pay? That number is the assessed value. The missing piece of the puzzle is your assessed value, which is unique to your piece of property. Your assessed value is the dollar value assigned to your property by the town's assessor and is based upon its fair market value. It is your slice of that EQV pie for the entire town. The assessed valuation determines the value of property for tax purposes, and it takes into account comparative property sales and inspections. The sum of everyone's assessment, the sum of all those assessed values, such as I showed you in the Rock-Hobith slide, all of those assessments added together is the EQV for the community, or the tax base for the town. Your tax bill is your assessed value divided by 1,000 multiplied by the tax rate per 1,000 of assessed value. That's it. If your assessed value $250,000, the tax rate $13.24 per thousand, you could very easily calculate what your tax bill is going to be. Let's look at an example. For fiscal 21, the Massachusetts Division of Local Services computed the average single-family home in Rehoboth as having an assessed value of $423,042. Our fiscal year 21 tax rate is $13.24 per thousand. That average single-family home has a tax bill of $5,601.08. It's computed by taking the assessed value, the $423,042, dividing it by 1,000, and then multiplying that result by $13.24. You can do the same formula with your tax bill by looking at your assessed value and plugging it into this formula. In this example, again, the average single-family home, $5,601.08. That concludes the presentation on what are property taxes. Where do you go if you have questions about property taxes and some of the other topics we will discuss in future videos? Shown here on this slide are different points of contact whom you can contact if you have questions. For example, as chairman of the Finance Committee, if you have questions about the town's budget or this presentation, you can contact me at my email address or my telephone number shown here on the screen. If you have questions about the school department budget, you can contact the superintendent for the regional school system. When we talk about overrides in one of the future videos, if you have questions about the override voting process, you can contact the town clerk's office at the number and email address shown here on the screen. Questions about your property tax assessment, how your tax bill was computed, and exemptions and abatements can be directed to the assessor's office. Questions about paying your tax bill, if you need to make arrangements to set up a payment plan, for example, due to the pandemic, and perhaps you're out of work, you can contact the town's collector at the number shown. For the Senior Work-Off and Valor Act programs, which we talk about in the last video with property tax relief, you can contact the COA director or the veterans agent for additional information on those programs. And if you're not sure who to contact, you can always call the town administrator's office or email the town administrator with your question, and the town administrator will direct you to who the correct party is that you should talk to in order to get your question answered. If you'd like to read further about levy limits, different types of property tax forms, overrides and exclusions, here are some links that you can go to on the internet, which will provide you with some additional reading information. I'd like to take a moment to thank Colleen Simpson, Sue McBride, and George Solis on the Finance Committee, who have helped with the preparation of these series of videos. I'd also like to thank Linda Greaves in the assessor's office, as well as Cheryl Gouveia, our town treasurer collector, for their invaluable assistance in preparing these series of videos. And finally, I'd like to thank Selectman Jerry Schwal, a gentleman I have worked with closely for the past 10 years, both on Finance Committee and when he became a selectman, who also helped greatly in the preparation and critique and proofreading of this presentation as well. That concludes our presentation on Property Taxes 101, What are Property Taxes? I'd like to thank you for taking the time to sit through this 36-minute presentation. Hopefully you were able to get some good background information on property taxes from it. And please go forward and view our other videos in this video series to provide further information both on how your individual tax bill is computed, as well as some of the more advanced topics such as split tax rates, revaluations, and property tax relief. Again, my name is Mike Deignan, Chairman of the Town's Finance Committee. Thank you for taking the time to view the video today.